The amount of money pumped into the global financial system in the past couple months has been historic to say the least. There has been no indication that this will stop. It can't. Many retail investors have begun to buy the dip and join the cheerleading squad. Of course, today, retail investors have missed one very important point. Are the high frequency trading algorithms buying this, or are we on track to beat our previous highs in short order? You came here for the truth, so let me unveil that for you. I want to talk about 1929 and 1987, two very different times. We're going to lead off with that. Then I'm going to talk about the economic factors here that are clearly present. We're watching this deteriorate at a rapid pace, and I want to look at various factors. Let's begin. Here are the charts from Morgan Stanley, and you could see on the left-hand side, after the 1929 crash, there was no retest. So essentially, we have all this optimism, we have this buying in, then it falls off a cliff, and then we have another resurgence. However, as I've noted in the previous video that I did, you can see that there were these patterns appearing where we saw the buying of the dip, and then we saw lower lows coming down, and then buying of the dip, and then lower lows coming down. And this repeated all the way down, and from the very top to the bottom, it was an 89% drop. In the case of 1987, we saw all that optimism, and then the market dropped by over 20% in one day. But after that, although it did take some time, the market bet its previous highs. In the case of 1929, it took something like 25 years, and as you can see, in 1987, it didn't take nearly as long. It was only a couple years in this case, though that initial fall was very dramatic. Now, I just want to compare the two here. There are underlying conditions in any particular crisis that need to be addressed. It has nothing to do with the percentage of the decline. It's got nothing to do with PE ratios. There are absolute fundamentals that need to be addressed, and if those don't get addressed, you have what we had in 2008. Essentially, you blow a bigger bubble. The bigger bubble creates a bigger crash. That's why right now, if you look at the markets, 30%, let's just say, as average it out, a 30% decline is nothing but a correction. So the problems that were present in 2008, they continued on all the way to 2020. We come down by 30%. That's a drop, there's no doubt about it, but it hasn't cleared out anything. It hasn't detoxed the financial system. So in the end, either we're going to go lower now or we're going to go higher, but the madness after would be something we've never seen before. We already broke so many records this time around. The fastest bear market ever, the biggest decline we have seen in terms of points. It's been rallying, it's been falling, it's been insane. So expect more of that, if not in the near term, at some point in the future. This simply can't last forever. US Airlines want a $50 billion bailout. They spent $45 billion buying back their stock. How does that sound? The amount of money that they want is the same amount that they put into buying shares. All right. Now, when I think about this, it's just so upsetting every time around. Now, these companies, maybe you could argue they should be free to do whatever they want. And that's a good argument. Just like individuals should be able to do whatever they want, there is personal liberties. In this case here, the company, they can lay people off, they can hire people, they can charge them this or that, whatever they want to do, the market should decide. But if you want to then ask for bailout money from the taxpayers, well, then that's a whole different issue. That shouldn't be allowed. If the company has to go bankrupt, do you think that there's going to be some crazy thing that happens as a result? Companies go bankrupt all of the time. You'll have another company that comes in and buys it out. There will be new investors that come in and think, well, I would love to buy this company. I think it's a great thing to get the shareholders together, they get the board together, whatever it might be, and they buy in these new companies and they fix them up, they get rid of what doesn't work and they fix it, and it might take a while, but this has happened. It happens in all industries. So when I see this type of information here, it's just terrible. This right here tells you that there's something seriously, fundamentally wrong in this case, the United States, but look at this all over the world. And let me just get to the point. Stark photos show miles-long row of cars waiting outside Florida Food Bank as demand surges by 600% and more than 500,000 residents file for unemployment. What has happened here? We've had a few weeks, just a few weeks, where these people haven't been getting paychecks and they're in trouble. People are living paycheck to paycheck. And if that is disrupted, we have major problems. They need to get that money on that day or else everything is screwed up for them. Their payments are coming out on the 1st and they need to make it or else they'll be delinquent. They're going to be screwed over for so many different things. And this is how you know that the economy is not as strong as they have told us. This is a real economic indicator. This is an article from a little while ago. I just wanted to put it here to touch on the fact that corporate executives cash out of their own stock more after their firms announce stock buybacks than on a typical day. So we have the two extremes here. We have these individual companies that are wealthy, that are making money like crazy, that are going to get the bailouts, that are going to have their CEOs get the bonuses, and the taxpayers are going to lose as a result. And then you have individuals who are waiting in lineups that are miles long to get food to eat. The individuals on the inside, they do these stock buybacks and all the way they're selling off some of those shares and they're profiting off of the whole system. But people think time and time again that everything is being fixed, everything's being corrected, don't worry, this is going to be okay in the long term. They don't care about you. They absolutely don't care about you, and I wish more people would realize it. Cash balances have fallen sharply and debt levels have risen. The only reason I put this chart in here was to talk about corporate debt. You are seeing the corporations taking on massive amounts of debt. And as I mentioned, I think it was the last video, the one before, we have these companies doing it. Why? Because they have incentive and every reason to do it when it's cheap. When the money comes cheap, of course they're going to borrow. They take risk. They buy back their own stock. They push the price up. When you look at it, it isn't their earnings that have done better that makes the stock look attractive from outside investors. It's earnings per share. And why? Because they've been buying back their own stock. That's why you have seen this from 2009 up until the present, well, really up until 2020, let's say. It's been so crazy and so strange on a historic basis. But of course, this has been the result of easy monetary policies and is done on purpose. Don't think that, well, they had to do it because they had to save the economy 2008 and so on. No. This entire thing has been set up and contrived from the very beginning. They create these bubbles on purpose. You might know Michael Burry from The Big Short. Well, he was interviewed by Bloomberg over an email, and essentially he talked about having a significant bearish market bet that is working out for now. He wants it to go better, but at least in the near term, he's still got these bearish bets happening. It is a trade of good size against the indexes, and while some would focus on that, I think the real key is right here. He said that the situation that we're dealing with right now could unwind the passive investment boom, which he compared to purchases of collateralized debt obligations, CDOs, that fueled the pre-2008 mortgage bubble. He's talking about ETFs, and this isn't the first time he's mentioned this, because we have big problems with ETFs. I have highlighted this numerous occasions, but most people, they don't know what to do, so they just buy into the ETFs. They buy the S&P ETF and they figure, I don't know how to stock pick, I'll just buy the index and I'm going to do well. Unfortunately, this is a big problem when you have a lot of people selling. We haven't seen too much of it except for the leveraged ETFs. I saw one that essentially became worthless as a result of the insanity that they've created. I think it was a 3x leverage. Either way, when I look at it, it's a problem during the low liquidity, high stress environment that does happen. Right now, you can look at the VIX index and it is looking significantly much, let's call it easier than where it was just, a week or two ago. It's a joke, but when you look at what's happening in the markets, you see all these little things that are breaking along the way. This could be one of them. New York City restaurateurs plead with landlords for rent forgiveness and deferment. You got to think about this for a sec. How crazy is this that there are so many different types of corporations and companies, businesses, individuals, big and small, all throughout the spectrum that are unable to pay their bills? What do you think is going to happen to these people, to these companies? What do you think? They're going to be in trouble. They're going to lay people off. And at the same time, the people they owe that money to, those people are going to be in trouble. Those lenders, those banks, and that's going to create a cascade. It doesn't take much longer. The expectation is that we're going to go into the summer here with this issue. While it might get better, still being a problem because everything's going to remain closed. And of course, this goes from a health issue being the priority, and we could easily have something with the mortgages or with anything related to debt simply collapse this system. This article here out of the AP is basically talking about Africa and how they cannot cope with what's happening. Economically, they are taking a serious hit and it looks like it's going to get worse very quickly. If I have any specific information in the coming weeks, obviously I'm going to bring that to you, so stay tuned. Treasury will likely need to borrow $3 trillion for the remainder of 2020. Nobody even cares anymore. The amount of debt and deficits keep on getting worse. And whether we talk about someone in the government, an analyst, or the former Fed chair Janet Yellen, it doesn't really matter because they don't care. We have to fix the problems now. We have to take care of this situation now. We can't worry about the deficits. We can't worry about the expanding debt. But why weren't you worrying about it in 2017? Why wasn't it being dealt with at that point when month after month the stock market was going up, unemployment was going down, you had such strength in the economy supposedly? Why weren't you dealing with it then? Of course, because you cannot reduce the debt or this entire system will collapse. That is a fact. The fiscal response will result in a steep increase in the deficit in fiscal year 2020. That's for sure. There's no doubt about it. The question is, what do they intend on doing about it? What are they actually going to try to maybe reverse it? Or are they just going to have this forever and ever and it's okay? I don't think so. At least when you look at it historically, at least when you can see this from a bird's eye view, when you zoom out, it never ends well. Germany plans limitless credit program for small companies. They want to be able to do whatever they can, and they really don't care about deficits and debt as well. This was one country that was actually in a surplus. They were totally fine, at least when compared to their neighbors, and unfortunately, that's going to be thrown out the window like all of the others. A little bit of humor here. You can see the ECB announces package of temporary collateral easing measures. Can you believe this? Waiver to accept Greek sovereign debt instruments as collateral in Eurosystem credit operations. You're going to accept Greek debt as collateral? You know something is messed up because these countries, they were buying in some cases hundreds of billions of dollars of this stuff. It's completely worthless. They know that, just like Argentina, which I'll show you in a second. But hey, you can use it as collateral. Tesla, just one more company to get rid of some people. You can see Tesla will slash employee pay and furlough employees. Seems like all companies are doing this now, even though at some point they had said, don't worry, we're not going to do this, we're going to keep paying you. And many of them have had to get rid of a bunch of people, or in some cases they say all of them, but it's just temporary. I have a very good feeling that they won't require all of them back once things do start to open up. This one company here actually laid off people over a Zoom session. So they're doing video conferencing and they just told 400 people, you're gone. This article is written about this one company, but there are others doing the exact same thing. They don't need them. Say goodbye. And for the 9th time, Argentina has defaulted on its debt. I'm not sure why any investor has put a dollar or a dime into this country, particularly with their sovereign debt. They have a habit of not being able to pay it back. It created century bonds, 100-year bonds, and it was oversubscribed. More than what they were actually putting out there. But what happened to it? The value decline dramatically. It didn't take too long. The entire system is broken from the inside out, and we can see those cracks appearing all over the place, but it is very, very asymmetrical. That's all for this video. If you found it informative, hit that thumbs up button. When you do, you're supporting me, so I want to thank you for that. If you want to see me on Instagram and Twitter, I do unique content on there. I'm trying to diversify off of this garbage platform, so check me out at The Money GPS. If you want to learn about e-commerce, I have a free e-course for my subscribers. You got these other guys out there charging $1,000, $2,000. Mine is 100% free, no catch, the AmazonGPS.com. If you want to understand the financial system, well, there's a lot that you can get into, a lot that you can read. I know most people don't have the time. When I first started getting into the economics texts, my goodness, it was boring. Eventually, I decided that for the average person, it's just going to be impossible to get all this information. I created these 2 books to make it super simple for anybody to understand. So check them out at the link in the description if you want the audiobook, themoneygps.com. This video here talks about gold. This is my opinion on where I see gold as an investment and so on. If you haven't seen it already, definitely click on it and I'll see you there.